Hey folks, welcome to another edition of Living in Calgary. I'm your host, Brian Howard. And today I have on the show a long time, I wouldn't say friend, but connection, maybe colleague in this real estate space, Marson Drosts. And I met probably about 2011. Marson was in probably 5 years into his real estate journey at that time. And we had a great conversation. We both remember fondly at the Blackfoot Inn, started having a coffee, and he was really connecting, looking out for shakers and movers in the real estate industry. And I was grateful for our connection, although Marson and I have never really, done business, but I've been on his email list and connected and always impressed at what he's doing. So here we are 10 years later since first meeting. And Marson, welcome so much for the show. Thanks for your time.
Thanks for having me, Brian. Yeah, 10 years later and a few wrinkles later, here we are, right? So.
I think you're actually looking a little fitter than you did even when I met. Is that possible? What are you doing to stay fit these days?
I've got the love of my life is 10 years younger, so she keeps me moving.
Oh, that's important. Yes. Must you have kids?
Yeah, actually, we just had our first daughter, literally last month here, November 10th. So yeah.
That's fantastic. Wow, congratulations. I should also add here, in terms of a little bit about you, the elevator pitch. You're an active investor who has sourced over $250 million in capital for several ventures, ranging from real estate, customer service, and finance. You're the host of I love the name, The Game Podcast, where you're interviewing people who crushed it in real estate, entrepreneurship, and mindset. Awesome.
Yeah, thank you.
So you're having some fun. And so Marson, maybe just sort of get into it. What year did you move to Calgary and what strikes you about living in Calgary?
So I ended up in Calgary, I think it was 2008, tail of 2008, early 2009. I don't remember exactly when, but I know it was right when the party ended the first time.
October 2008, the party ended. Yes.
Oh, is that what it was? Okay.
It was October. Yeah.
Might have been around then, because I saw a lot of realtors and mortgage brokers trading in their Ferraris for Camrys back then. So, it struck me as quite odd, because where I grew up in Ontario, you're always hearing these stories where Tim Hortons workers were getting paid $15 an hour, and guys were getting paid $100,000 a year to cook eggs up in the camps up north, and just all these stories, right? And living in Ontario, you're just like, $100,000 is a lot of money today, still, all things considered. But in 2008, wow, like that was insane. So yeah, I think I ended up in Calgary right when the party stopped the first time.
I did a little, as I was preparing for our interview here today, or a chat, I should call it. I was doing a little research on you, and I read, you have a great YouTube channel. I learned that you originally came from Poland with your parents. I'm guessing you were probably 5 when you guys moved from Poland. Was it Warsaw to Toronto? Tell us a little bit about that.
Sure, yeah. I was born in communist Poland, and my dad got arrested for smuggling corn into the country. He was selling corn, like literally at the black market, if you can imagine. He was basically running an illegal grocery store, and he got arrested, and they were going to send him to jail. He didn't like that idea. My mom didn't either. So that night on a moped, because we were in the southwest of Poland, they literally took a moped through the forest into East Germany. And eventually into West Germany, and a couple years later, because I was only a few months old at the time, a couple years later, my grandpa literally threw me in the trunk of his car, because he was a government official, and just drove me across the border and reunited me with my family. And then eventually in '91 we came to Canada.
He smokes. And what year were you born? Like, what year was this that you're 85? So your parents did this, wow, in 85, just before things were a little easier in the 90s, I guess, in the 2000s. Interesting.
Yeah, nobody knew things were gonna, there's this big political movement in Europe, Poland, called Solidarność, which was essentially the right to choose, freedom, and all the freedom of the people, so to speak, right, from the whole communist manifesto. And yeah, we were already, who knew, right, that it was going to happen. So we, for good measure, dad didn't want to be told that he can't run a business. So, we were lucky enough that Canada would have us.
And so that was in 85, you were born, your parents, I guess it was that year that they sort of escaped on a moped, your grandfather. I know a fair amount about Poland. I have a great friend, and lots of stories about the area, about Poland. And then you moved to Canada roughly what year? What year did you, and was it Toronto?
It was 91. I can tell you it was August, I forget the day, but it was August 91. And we ended up in this house with 3 other families in Roncesvalles, downtown Toronto. And Roncesvalles now is a really nice, all of Toronto is really, nice at this point now, but that was a pretty, rough and tumble neighborhood back then. And I remember I'd never experienced humidity before. And, you just come to this new country. And I remember seeing my dad, master mechanic, businessman, entrepreneur, just any job he could get, sweeping floors. My mom was a pharmacist, she was PhD, she's working at a donut shop, thrift shop. Like you just did whatever you had to do, right? And I grew up with that, and I saw that as a kid. And there's never a plan B. You just made things work. Like whatever it was, it was going to work. You didn't know how yet, but it was going to work.
Interesting. So I graduated from university in 1990. There were no jobs in Canada. So 91, there were still no jobs. We were in a tough time. And so you guys landed in Toronto. And so obviously you grew up in the area, and you moved to Calgary in 2008? You already told me.
Yeah.
And what brought you to Calgary? Was it your family, or did you come here because of the real estate? What was happening? That stopped.
Well, I came more so for an opportunity to work for a private equity firm at the time. They're no longer around, but it was a family-owned shop, and it was an opportunity because in Ontario before those late teenage years, I'd read Rich Dad Poor Dad, started buying rental properties and things like this. And I had an opportunity to learn about larger apartment buildings, land assemblies, just larger transactions, things that you only read about. And so I took the opportunity, and the opportunity was in Alberta, and I ended up in Calgary. And as I came here, like I said, somebody, with the record, it was like, right? But I did that for a couple of years, learned a lot, and it really leapfrogged my education in real estate because of that. So.
What's your education background other than high school?
So I went to college for law and security initially, and then I went to York I got accepted for, the initial year was business or law. I hadn't decided yet. And I started buying property at the same time, and I just dropped out of university. I was bored out of my mind, to be honest with you. It was good information, and in hindsight, if I took accounting specifically and just stuck to accounting because that's applicable for business, I would have probably stuck with it. But because the things I was studying were so it felt fluffy to me. Like I couldn't apply it to what I was doing. So I just ended up dropping out, learning sales, public speaking, getting into real estate. And it's, despite my mom, she would have loved to have been able to say that her son's a lawyer or an accountant or something like this. But despite my mom's misgivings, I think I made the right decision.
Yeah, you were early to the boat to realize that, hey, maybe I don't need that whatever $100,000 4-year degree or $200,000, whatever it cost at the time or still cost. You're early to the party. That it seems a lot more young people are doing that today because everything seems accessible on the internet in terms of self-learning. And then in the motivation too. There's a whole motivation part if you know what you're going to do, right?
Yeah, well, I was sitting in the classroom and I did the college thing, and college was fine because it was hands-on and I had enough time to keep doing the house thing on the side. But then the first year of university, I'm sitting in this classroom with a couple hundred people. And as I'm talking to these people, they're all talking about getting good jobs, getting good grades, getting promotions, and all this stuff is fine. But my brain was like, well, I don't want to learn how to work for people. I want to create things. Mm-hmm. And the people I was talking to, I didn't feel like I was in my environment with those people. And good, bad, and different. I wasn't. And then the workload, it was so technical and so deep. And I'm like, why am I learning this stuff? This stuff doesn't help me today. And, again, being early 20s, maybe you make decisions a little bit more brashly, but yeah, I was excited about actually going out and doing stuff.
Neat. Marson, we originally got reconnected. Somehow I maybe clicked one of your links on a Facebook ad or something on how to raise capital. And I maybe even signed up for the free 1-day course, limited time offer, and never participated in the course, but I'm on your email list, because I was, I'm curious about, what you're doing on that. And I just want to sort of say, Awesome. Congratulations. It's curious to me. I haven't done it despite over the last 20 years having lots of joint venture partners in real estate. I'd like you to tell us a little bit about what you're most focused on right now, and sort of maybe tie in one of my standard questions is, what's easy for you these days? What's hard for you these days?
All right. Well, what's easy for me? Maybe I'll just start with that and back into the question. What's easy for me is I love teaching about, I love real estate, but I love structuring deals as much, if not more. Real estate has always been my preferred deal outlet, so to speak, but structuring deals, PE, private equity, that kind of stuff is easy for me. I mean, there's always a lot to learn, but for me, I'm passionate about it, so it's easy in that sense. What's difficult for me is lockdowns, sitting still, actually, out of necessity. So my latest business that we started with, this whole how to raise capital and this educational side, was 6 months into lockdown. I'm sitting there and Maria, my sweetheart's looking at me. She's like, you got to do something. Like, you are, because I used to be on flights, meeting with people, buying buildings, doing stuff, and for a period of time you're online, right? So I had a lot of people reaching out to me about deal structure and things like this. So I put together a group. I created a company called M1 Real Estate Group, where we teach people how to raise capital, how to do deals, and things like this. And that kind of came together. And for me, it's a lot of fun. I have one student. His name is Ash. He's in his early 20s. He's still in college. He's in the US. He literally hops on our calls every week during the day while he's in the classroom, and he's listening to it while he's doing the college thing. And he just bought his first property. He structured, I think he did a JV with some friends or things like this. That was cool. And then I have other colleagues that are part of my group that are working on 300-400 unit acquisitions. So, it's a wide range of people, but for me, it's just fun to see people kind of that light bulb that, when people get it, for me, that's exciting. And yeah, as far as my main world, what I've always been doing, what I do is I focus on buying apartment buildings. I'd love to buy in Calgary. Brian and I am looking at deals all the time, but I'm having a tough go, as I'm sure you hear about the prices here in Calgary relative to what people are willing to pay. It's tough. So for the last few years, I've been focusing on primarily the Southeast United States. I bought just shy of 300 doors in the last little bit in Memphis, Tennessee. That was, how much did we pay for that? In total, maybe $7 million. Think about 280 doors. I got to put a couple million into CapEx, but still. And now we've got a couple hundred doors under contract in Florida. So I think Florida is a really good market as well. And yeah, I'd love to do that in Calgary. And maybe we'll talk about Calgary a little bit more, but I'd love to do that in Calgary. It's just, the economics are, I can buy apartments for 40 to 60,000 a door in the Southeast compared to 200,000 to 300,000 in Calgary per door, right? So the numbers are just really apart right now.
So I'm interested, Marson, what's going on in the past 2 years in Canada and Calgary? Because you're going to study, you studied, I think, markets, you've studied Calgary real estate. Where are we at right now in terms of, I have good colleagues, of course, in Toronto, East Coast Canada, West Coast Canada, Vancouver Island, and prices have just gone crazy. Actually, in the past 30 days, I read from a Canadian Mortgage Housing Corporation kind of stat that prices in Canada have increased 18% across Canada, on average. In Alberta, it's 3.5%. I'm wondering, do you think Calgary is a good place to invest currently? I'm actually a little bit surprised to hear you, bad talk Calgary. I mean,
let's clarify the conversation, because I'm talking commercial.
Multifamily. You're talking
multifamily, but if we're talking single family, we bought 3 houses this year alone in Calgary. So Calgary, as far as single family and the smaller properties, are fantastic. I am bullish as bullish can be on Calgary when it comes to houses and maybe small duplex type of situations, maybe land assemblies, things like this. I'm actually looking at, so we just bought a house on Memorial, and I'm looking at buying the neighbors' houses potentially for land assembly, because the zoning is MC2, I think it is. So we can, we can do a conversion. So Brian, don't beat me up too bad, because I agree with you on the small side. And here's something else, okay? The price per square foot to build this stuff, like the house we just bought, so the last two houses, one was 500,000, one was 520. One was a part of a quadplex, one was a standalone but an older house. Per square foot, without the land itself, I couldn't build what I bought. You know what I mean? So if I could build it for what I paid for it without the land, as an indicator of that is not the only indicator of value, but that's a pretty good one. Because lumber is not going to get cheaper, windows aren't going to get cheaper, copper is not going to come. Like, all this stuff is like inflation, whether it's transitory or whether it's here to stay. I don't think prices are going to come down to any meaningful amount. So as an indicator of value on the single family side, I'm bullish as heck. And there's a lot of money coming in from Ontario, because these guys are selling their $2 million condos downtown Toronto, and they're coming here and they're buying $600,000-$700,000, what would be a $4 million house in Toronto for $600,000-$700,000. So very bullish on the single family side. 100%.
Okay, so I just have to let the viewers know, and yourself as well. So in terms of that question and that conversation, when I was very early in my real estate career and was very focused on investing, but focused on investing in single family homes, I met this great guy on Edmonton Trail. Forget his name, but he was a Hungarian background, I'm pretty sure. Could have been Turkish. And he said to me, Brian, smart people buy single family homes as investments. Smarter people, buy fourplexes. And the smartest buy buildings. Something along those lines. So as my conversation to you just now it is like, you have a podcast about strong mindsets, big thinkers. So my questions are coming from a small-minded person thinking of investments like as a single family home. That's just a fun conversation, really.
But you make a really good point, Brian, because so I'll preface all this. I'm very bullish on Calgary as long as the property cash flows. And I don't mean you buy it in an Airbnbs and then it cash flows by the skin of your teeth. I mean, can you buy it and just rent it as a normal rental and cash flow it? If you can do that and it cash flows, then you're fine, because you're not speculating on, potentially the market going crazy like it did in Toronto. And in a lot of ways, those fundamentals, whether it's single family or multifamily, it's the same thing.
Mm-hmm. So in terms of that, like, speculation, so right now, my son recently became a real estate agent in Victoria, Vancouver Island, and he's doing these deals with these like young guys, kind of investors, like buying at $500,000 or $800,000 condos that they're actually turning into Airbnbs, and they're getting huge cash flow. But it's kind of speculation, or is it?
Well, you're taking on, so I'm looking at some buildings in the US right now where they were former hotels, and we're looking at converting them into 1-bedroom or studio apartments for just long-term rentals. And you gotta be aware of the goalposts. So for the hotel industry, it's all about ADR, average daily rate, right? Mm-hmm. And your occupancy rate and things like this. And the problem is, people, when they do the Airbnb thing, they still have the blinders of the hotel business wrapped into a residential real estate play. And you're confusing the conversation if you do it that way. The other thing too with Airbnb, and we do Airbnbs, but I only do them where I control the environment. So I would never buy a condo and do an Airbnb. Why? Well, condo bylaws, the rules, the local municipal ordinances, there's so many different variables. Technically the municipalities can outlaw them in houses as well, but I've yet to see that outside of, really hot tourist areas down in Florida and things like this. But yeah, the advice I would always have, and it's not popular advice because it doesn't work and it prohibits sales, is that if you can run it as a rental and cash flow it, then if you Airbnb it and you cash flow even more, then of course that sounds good. But that doesn't sell condos, because it's hard to buy a $500,000 condo and charge $2,000 a month rent and cash flow.
Right now is, you mean you're bullish on Calgary. Also on a scale of 1 to 10, how easy is it to buy a home? Let's call it a single family home, maybe a single family home with a basement suite. How easy is it to buy a property in Calgary that can cash flow today?
It's easier here than in Ontario, I'll tell you that much. So I guess I'll give you an example. So the last house we bought it just on Memorial. I paid just about $500,000 for it, and mortgage
was it actually a detached home on Memorial?
Yeah.
For $500,000, that's it, eh? Good for you.
Well, it's a 100-year-old house.
Yeah, I assume.
It's a 100-year-old house, but it's actually really good. It's got good bones. It's got 20-30 capex that it needs, and that's fine. But
and it's a half lot, so 25 feet.
Yeah, it's 29 feet or 30 feet or something.
Well, that's good.
And it's 130 feet, 120, 130 feet. It's a deep lot. You could build a
pretty
front
big. Yeah.
But my point is just that $500,000, even if you paid $600,000, your mortgage is between $2,000 and $3,000 a month. So right there, if you're just going to rent it as a regular rental, you're already probably behind the 8 ball, because you have property taxes, insurance, things like this. So, the nicer areas of Calgary, just on a strict cash flow basis, is hard to do. But if you go further out on the East End, Forest Lawn, that whole area where it's starting to develop, and there's a lot of rejuvenation happening in that area. I was talking to a few developers out there, and they're pretty bullish on the gentrification of that whole area, where you can get your average price down, where you can buy a duplex for that rather than a single family house. Then it's a lot easier to cash flow positive.
So with that house on Memorial Drive, will it cash flow for you?
Yeah, we're actually going to turn it into a Airbnb, but as a standalone rental property, it would cash flow maybe $100-$200. Like it would, but that's not we're not doing that. But if that was the backup, do you understand what I'm saying? Like if
I do, 100%. Yeah, I understand.
if it didn't work as an Airbnb, we could do it either as a furnished or an unfurnished rental. And furnished rental would cash flow really well. Unfurnished, it barely cap, but it would still at least cover itself. And if you're negative $50, $80, $100, I mean, as long as you're not looking for cash flow from that property, you're fine. But the Airbnb, I mean, we have some Airbnbs that net cash flow $3,000 to $5,000 a month. So it's, it works. But again, that's only that isn't what I went into this thing with, right? Because to your point, Calgary, I mean, look, I'm bullish on Calgary, but I don't know if it's going to take off next summer, 2023, 2024, 2025. Who knows what's going to happen with Trudeau? Who knows what's going to happen with the oil industry? Who knows if, Amazon's impact on Alberta and Calgary in particular is going to be as, fundamental as we're all hoping it is. There's just so many who knows, right? So in the meantime, as long as it cash flows, eventually you'll be right. It's just, are you right today or are you right in 5 years?
Okay, how long can you wait?
To wait, because I remember the first rental property I bought, I was negative cash. I was 21 years old. First rental property I bought, I was negative cash flow $800 a month.
Ouch! Did that hurt?
I was 21 years old. You know how many dates I couldn't afford to go on?
Hey, sweetheart, another picnic.
Yeah, we're going to the park. What do you mean you don't want to go for a walk?
So so do you own Airbnb in Calgary currently? Do you have anything Airbnb properties? They're awful in the city. I mean, awful when you compare to, I'm booking my trip to California or Phoenix or Hawaii, and the prices we pay at Airbnbs in other cities versus what like $100 is kind of a lot of money here in Calgary for an Airbnb. Not really, but there's lots of properties available for $100 a night, eh?
Well, and I think that the ones that we do, our average rate is between $200 and $400 a night.
Oh, good for you. You have nice properties.
Yeah, they're typically, more bedrooms, four bedrooms, 4 bathrooms or 3 bathrooms, that kind of thing. They're bigger houses. And that's what I mean. Like, if you're trying to, like the quadplex that we bought, the last one on Kensington here, where Kensington is.
Yeah.
The last one we bought in Kensington, we paid just over $500 for it. I mean, this thing is, and I bought that in the summer. I bought it privately, but to build to build this thing.
Wait a second. You bought a quadplex or a fourplex for $500,000 in Kensington? No.
One of the four.
Oh, one unit so there'd be strata fees then. It'd be a town, right? Okay. Yeah.
Yeah. The HOA, the condo fees are $250 or something like that.
Okay.
But my point is, it's 1,700 square feet. If your construction costs are about $200 a square foot, plus the land, I mean, basically you're replacing the asset for what you paid for it, just on a replacement cost basis. So real estate typically trades at a much higher multiple than replacement cost. That's where builders make their margins, right? That's what their builders count on, the fact that people are paying more than what it costs to build, obviously.
Just for fun, the math in your head right now, when you're talking about a price per square foot, what number are you using? Like, what can you build for in Calgary, a price per square foot?
Well, I've never built in Calgary, so just full disclosure.
Me either, and I have a number in my head too. But like, what do you use as an investor?
Just the box. I'd say 150, 175. It's hard to say because lumber keeps. Depends what month. I mean, I just literally looked at lumber prices for the last 3 months, and it literally just did this. But I look at the box, $150 to $200 a square foot, and if you have your finishes, it varies. So I mean, if you take $200, quick math, again, lumber changes so fast nowadays, and other things too. But and assuming you can get things, that's another thing. But $200 times 2,000 square feet is $400,000, and that's kind of. And then you got to assume there's some value in the land, right? So
yeah, I use the same math, Marson. So 10 years ago, a builder, a good friend builder, told me he was built, $250 a square foot, like 10 or more years ago, he told me that. And I've heard people say recently, I might say more new immigrant builders can build for $165 a square foot. I've heard that in the last 18 months. Certainly, I don't think I could do that. And then my sister, who recently built, probably built closer to $400 a square foot. I mean, this is her home. So yeah, it's in terms of quick numbers, I mean, 200 is not being really safe.
No, and I mean, if I showed you the finishes of these places, it'd be more than 200. But again, it's just because again, the finishes, right? Because like I said, just the box would be 150, and then you've got your upgrades, your finishes. Are you putting tile? What quality carpet are you doing? Are you doing hardwood, laminate? Are you doing there's just so many little things, right? But I mean, it's the thing with Calgary is I really do think there's a lot this city has to offer. Also, there's no traffic, and I know people that have grown up here think different, but I encourage you to go to Vancouver or where I grew up in Toronto, and you will see some traffic, because here, this is the fact that you can get around, relatively easy is great. Quality of life is amazing. You have world-class infrastructure, you have, the performing arts, you have all these different things that make Calgary, the mountains, it's just spectacular. Fresh air, for somebody coming from Toronto or coming from other parts of Canada, they're going to look at other affordable markets, and they'll compare Calgary to other centers in, central Canada, and bar none, Calgary just has so much to offer.
So Marson, my podcast is Calgary Living in Real Estate and Lifestyle. You've come from, kind of a global perspective, just in the sense of where you come from and your parents and your experience. And what I've noticed on your sort of Facebook group is that you are attracting, it's not Calgary based, it's like the world. It's like how to, in terms of your questions, it's how to raise your first $500,000 or $50,000 or $50 million in capital. This sort of leads me to the question, why, when you're big, you have a big mindset, some thought, around, you're a global thinker, why are you staying in Calgary? And in terms of your audience, who you like to teach to and train, your audience is global, isn't it? Or is it Western Hemisphere or North America?
Yeah, I mean, I'd say a lot of it is North American, but we do have a lot of people in Europe and overseas that, participate in our various forums. But you know what? For me, I love being a Canadian. I love living in Canada. I love just that feeling of being on Canadian soil. You know, call me biased. And for me, Calgary's always been my favorite city. It really has. I mean, I love Toronto. I love Vancouver, but I've always felt at home in Calgary, and I think it has a lot to do with the fact that it's a big city, but it still feels like something that you can wrap your hands around. And you know, I like that feeling to it. I've done the thing in New York. I've spent time in Montreal, and that hustle and bustle is great. But then, you know, now, especially now, I'm having, you know, kids, and you know, you start to change. And you know, I saw my daughter crying this morning, and it just changes. Apparently I put the diaper on the wrong way, but that's another story. But you know, long story short, Calgary is a fantastic place to live. I love doing business everywhere. I love doing business in the U.S., especially the southern states, because the rules are very, you know, they understand who butters the bread in terms of investors, investment, attracting capital. Canada, I think, is a little bit more. Yeah, I mean, enough said. Canada is Canada.
Interesting.
You know?
This probably has to do with your Polish background and your father smuggling corn into the country. There's rules, there's black, there's white, and there's in between.
Look, I mean, without getting too philosophically charged here, government's job is to aid in the conduct of great society. Its job isn't to direct society. And I think when you start to see too much direction coming from above, you start to slip in a territory that, you know, a lot of people that grew up in those territories try to get away from. So, you know, there's parts of Canada that are much more open. And, you know, it's very hard to compare Canada to US, because US is just so pro-business. They just like, let's go. Like, everybody is motivated to make something happen. And I love that.
Yeah, it's true. Interesting. Let's jump in a little about finance and stuff. What were some of the biggest lessons you learned on your plan to raise $250 million the first time?
Well, I mean, raising money, whether you're raising $50,000 or getting a $50 million commitment from an institutional facility or investment group or whatever it is, there's a lot of similarities. And, you know, this is one of the things we teach about, and it's having a certain approach to your business. So fundraising, in my opinion, is one of the hardest skill sets, one of the most underrated skill sets out there, because people, entrepreneurs, and I know people like this that think, well, you know, I have this great idea. People should just be lucky to participate in it. Like they're just going to fly. They're just going to gravitate to like a moth to a flame. Well, that's not how it works. Like, even the guys that started Facebook and Amazon and all the various real estate investment trusts that exist, they had to go around, tell their story, and go door to door and collect the first 5, 10, 15, $20 million to get started. So it doesn't matter how compelling your vision is you still have to do the grunt work. And it's easier to do the grunt work when you're really clear on what you're offering. So one of the things that we teach is the 6 factors that allow you to kind of craft your niche. And one of them is, you know, what's your unique selling proposition? So in other words, like, what makes you uniquely you? So did you grow up in construction? You know, have you always been in real estate? Have you always X, Y? Like, what is the thing about you that makes you unique? Another factor is the market that you're going after, the investment thesis. So there's all these different components, and really getting honed in on your conversation is so important, because I mean, you've seen this too. You meet somebody and they ask you what you do, or you ask them what they do, and for 12 minutes they just talk about stuff, and you're standing there and you're going, oh man, I have no idea what this guy is doing, and I don't know how to get out of this conversation. And then all of a sudden they're talking about something super specific. And it's important to learn how to engage people in a way where they actually want to learn about what you're doing. And that's probably one of the biggest things is, you know, learn how to be interested, not interesting.
Cool. How do you create an investor-friendly deal?
Well, creating an investor-friendly deal is, I mean, think about it from the investor's perspective. I mean, one of the main things to think about is you have, well, first of all, before the deal itself, you have to have a deal that you can explain in less than a minute. Now, I know there's a lot of technical stuff and data and analysis, but if somebody has to talk to me about a deal for 5 or 10 minutes, either A, they don't understand it, B, they don't know what they're doing, or C, they haven't fully thought it through yet. Because you should be able to tell me, hey, we're buying this building, we're buying this mobile home park. It's worth this. If I do this, it'll be worth this. Here's proof. Here's why I know how to do it. Like, it should be that simple. And those are the factors to get someone engaged. As far as creating an investor-friendly deal, I mean, first and foremost, have a management team that has done what they're obviously raising money for. Secondly, you need to have a structure where your investor feels like they're prioritized over you making money. It's okay to make some money as a management team going into the transaction, because you can't work for free for 3 years, 5 years, but you also shouldn't make all your money up front and then basically say, okay, so when this works, you're going to get your returns. So getting a good priority structure is important. And then finally, communicating investor communication. So when somebody invests, they're going to get a quarterly newsletter, annual financial report. What else? What kind of ongoing communication, and set those expectations up front, because you're not buying. Like, Brian, you're not buying a cell phone, you're not buying a car, you write someone a check for 100 or 500 grand, you're not getting something. I mean, you're getting a piece of paper that says you own units or shares in an apartment building or whatever it is. But other than that, that's all you got. So how do you retain and build that confidence over a period of time? That's the communication piece. And all those things will make it much easier for you to be able to go back to the well again and again.
So I'm, as I'm sitting here with all these years of experience, I'm like, again, I've had single joint ventures, and the biggest deal I've done personally was a fourplex or a fiveplex maybe. And so how do I get, and with all this experience, this age, I'm at the tail end of my career at 55 years old in real estate, like the last, 30 years. How come I'm personally, like, when I think of raising capital to maybe look for a deal, I'm thinking, well, or a partner, I'm thinking have their credit to to get mortgage financing, and maybe invest like 100,000 or 200,000. That's peanuts in your perspective, isn't it? Who's your typical student? Maybe you can just address both questions, kind of thing.
Well, so Brian, it's all relative. I mean, ultimately, I know people that own hundreds of houses. I was talking to a guy that owns 1,200 doors, and I mean single family houses down in Florida. And a lot of those houses he's bought himself, and a lot of them he's got JV partners. So you can scale that way, or you can scale with the multifamily way. See me, I'm lazy, and I'd rather do less work. I'd rather do more work less often, and I'd rather buy 100, 200, 300 doors at a time and then just take a minute. And that's kind of just my mentality. So it's not that one's right or wrong, but what I do when you're buying a $5 million or a $50 million acquisition, the numbers are bigger. So things like getting an investor to qualify for financing isn't so important in my world, because the bank isn't looking at me personally to pay the mortgage on a $15 million building. They're looking at the building first. Now they're going to look at the management team, they're going to look at us, make sure we can obviously sustain the business. But first and foremost, it's the deal itself. Now, if I was buying 100 houses or 50 houses a year or whatever it is, then you're right. I would need potentially somebody to qualify for credit and for somebody for equity. But even on the equity side, I would want to make sure that I do it in a way where I can simplify the paperwork, so it's not, and it's probably why I don't do the house thing with investors, because for me, it's a lot of work to buy a house with an investor paperwork wise. So I'd rather focus that attention on buying, a 20 unit or 200 unit building, because there's still paperwork, but it's a different scale, and it's as much frustration. Like this last thing we bought, this Airbnb, I've spent less time buying apartment buildings than I spent on this thing, just because it was an old house and I had to RPRs and engineering reports and all this stuff. And you do the same stuff for apartment buildings, right? So it's just a function of priorities. That's all.
I believe you. That's great. No, it's true. Marson, I'm kind of looking at my watch and I'm going, holy, we could talk for a lot longer, but we need to keep your time in mind, and certainly our listeners' time. maybe a couple of questions. Well, obviously we want to end with, how to reach out to you and get involved and follow you. So those channels. But I also want to ask, what advice would you give your younger self?
Don't be so hard on yourself. Don't be so hard on yourself. And Rome wasn't built in a day. I remember when I was starting in my early 20s, and I'm now in my, I'm 36 now, and I'm sitting here. I'll probably watch this podcast a couple of years from now, and I'll laugh at things I'm saying today as well. But I just was really tough on myself in my early 20s. I thought I had to have everything done at a certain age, and then I would give myself permission to enjoy myself rather than enjoying the process of learning as I do things. And I would always say to myself, okay, once I buy this property, I'll be happy. Okay, once I do this, I'll be happy. Okay, once I get this, I'll be happy. And it was like this goalpost that always moved. And then one day, I think I woke up when I was like 30. I'm like I've done this stuff, and why am I peed off at stuff? Like, why? Like, it's because I've never allowed myself to just enjoy the process. So for the last 5-6 years, just the good and the bad, because if you've been in real estate long enough, and you've been in real estate longer than I have, you will live to to feel dumber than you actually are, because things will happen that were well beyond your control. Mm-hmm. So just appreciate that. I had a mentor tell me, you're never as dumb as you feel, and you're never as smart as you look. So maybe that's good advice.
Exactly. Yeah. No, great advice. One of the quotes that I've heard are like, what defines success? And the success is the progressive realization of a worthwhile goal. And so so it's just like setting goals and like moving forward, and there's no real goalpost. So and take your time and enjoy the process. Nice to hear you say that. Marson, what's the best way for people to follow you, reach out, maybe contact you?
Sure. Yeah. My website is probably the catch-all, because it's got a lot of free resources for people that are trying to figure out how to scale their real estate business, or learn how to raise capital for their portfolio, or learn more about what we do. So it's marsondrosts.com. I think we can put that in your show notes rather than spelling that out. And then on Instagram, I have I'm pretty active there, realmarsondrosts.com. And then Facebook, we've got a group called, actually this group has really gone crazy since we started it back in October. It's called How to Raise Capital for Real Estate. And we started it back in October with like 30 people, and now I think we're about to crack 16 or 1700. So it's, if I knew Facebook groups grew like that, I would have started it a long time ago. Good for you. That's awesome.
Well, listen, I want to thank you for being on the show, and look forward to staying in connection a little bit closer than we have over the last 10 years.
Yeah, let's do it. I really appreciate the opportunity, and it's really encouraging to see you doing your thing here in Calgary, because the market needs people that are consistent. Because the one thing about Calgary is, for better or for worse, it has been a come and go town, and it's nice to see people like you, pillars in the community, which is really good.
Thank you, Marson. It's a pleasure.
Awesome. Thanks for having me.